Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Friday, June 12, 2009. In New Zealand yesterday, a report showed retail sales rose by 0.5% in April, and March's data was revised higher to show a smaller decrease than originally reported. Sales of autos led the increase. In Japan, industrial production was revised higher for the April period. Output increased 5.9% on the month compared to the 5.2% increase posted in the preliminary version. The annual rate improved to show production down 30.7%. That is still a hugely negative figure. The data does point to a bottoming out in February. The yen gained against the Aussie and Kiwi overnight, but gave up its gains in later trading. The Aussie yen pair, which had climbed 350 pips from Tuesday's low to Thursday's high, was perhaps due for a retraction. Stocks were lower in Europe and the US, which also contributed to a pullback in risk appetite. The dollar-yen pair, meanwhile, stuck within the range established this week, climbing from support near 97.50 to resistance at 98.40 today. The dollar was boosted by comments from Japanese Finance Minister Yosano that his nation's confidence in U.S. debt is unshakable and that its status as the globe's reserve currency is still safe. In the Eurozone, industrial production fell 1.9% in April, a figure that was much worse than expected. On the year, output is down 21.6%, the biggest decline since this indicator began in 1986. The further deterioration in output in April will keep the pressure on the ECB to go through with its plan to buy bonds in an attempt to improve the flow of credit in the economy. The euro-dollar pair fell in favor of the greenback, falling back to the 1.3959 area after a rally yesterday brought the pair above the 1.4150 level. With today's move, the pair continues to stay within the 23.6% and the 61.8% Fibonacci retracement levels from the down move seen last week. We could be setting up a triangle pattern as we have a downward sloping line of resistance and an upward sloping line of support. Yesterday, we showed how the pound-dollar pair was approaching strong resistance, and though we did not see a retest of last week's high at 1.6650, the pair did reverse yesterday's move and fell 250 pips in today's trading. The pair found support near 1.6330 and recovered some of its losses in New York trading. For the week, the pound has managed to win back most of its losses from last week when political turmoil pressured the UK currency. In the US, import prices rose for the third straight month in May, climbing 1.3%. That was lower than forecasts, but is still the largest monthly gain since July of last year. The data shows the effect that the recent climb in oil prices has had on import prices. Consumer confidence in the US rose again in June, the preliminary version of the UMich Sentiment Index showed. The increase was slight, moving up to 69 from 68.7, but looking at the sub-indexes reveals an interesting dynamic. The current index jumped to 74.5 from 67.7, which is the highest level since last September, while future expectations fell back down from May's level, registering a 65.4. Also, the report's inflation gauges increased as well, with inflation in 12 months' time seen increasing to 3.1% from previous 2.8%. We've already seen the greenback's gains against its other key rivals, so we will show one more here with the US dollar-Canadian dollar pair. After sliding in yesterday's trading due to higher risk appetite, the pair fell more than 200 pips to set a high near 1.1250. Weaker stocks in the US and falling oil prices pressured the loonie. The first half of next week will bring inflation data from the US and UK, sentiment data from Germany and the Eurozone, and also employment data from the UK. And that wraps up our coverage of the Forex market for this week. Thank you for joining us here at CMSFX.com. And from all of us here at CMS Forex, have a great weekend.